Hi guys, welcome back. Another quick video, and this one is using ADR, average daily range, in order to cancel out bad trades that you might get involved with for any particular reason. You see that I go on and on and on about average daily range, and that's because price, is moving an average of 50 to 100 pips a day. If it's already moved its average daily price movement, then there's a very high chance that you may enter a trade that starts retracing for no apparent reason. Well, ADR is probably one of the reasons why. So we see this trade here on New Zealand dollar, and it's picturesque. Okay, we've got this sort of accumulation phase, blow off top up to the trend line, which I don't use trend lines to trade, but they're good there as a visual aid just to confirm your high time frame bias. Price has moved down, rejected this area again, pulled back up, but you can see we're making high highs, high lows, high low. Right, so we'd want to get involved in a short trade here. We're looking for a 2-hour trade. Okay, so following the wicks, and price comes up, stalls a little bit, but there's not much in terms of drawdown here before we actually start moving down again. Where you see price is starting to reject, you look to the left where it's broken this level, right, and there's not really much then until this level over here. So you got to think to yourself, well, why is price stopped? Okay, why does it just stop moving all of a sudden? Well, the reason is this. If you go through your charts with the average daily range on, and you see how many times price actually stops when it hits the average daily range. So the average price movement per day for New Zealand dollar, okay, is 51 to 53 pips per day. Now, what happens when it moves? You see this here, stops, pulls back. Okay, this is late on in the night, but whatever. This didn't quite hit an ADR before it stops. Okay, here again, we've kind of broken below, but we've come up, we've moved 53 pips, then again we've come down, we've actually moved up and down in a day here, and this is news orientated, so nothing to worry about here. And then again we've come up, we moved 53 pips, maybe a little bit more, and we've stopped. And now you're looking at this trade, you're thinking, right, I haven't even hit 1R yet. Why haven't I hit 1R? Well, because we're trying to trade through and past the average daily range. And when I went through this on a live session with a couple of guys not long ago, we looked at a few various pairs, but over a period from, I think it was the beginning of October to the end of December, you're looking at around 90 days where price had only gone past the ADR 3 times in that 90-day period, where we could have got a 2-hour trade. So use ADR to help you filter out bad trades in the future. It's a great tool. I don't think I'd be able to trade without it, to be honest. Anyway guys, see you in the next video.